JP Morgan came out and said business as usual as you see the Chinese market crashing hard today. We have K-Web down 14%. We have the MSCI down like what? 9% today. It's insane what's going on in China. Xi Jinping just got his third term and people are worried like crazy because we don't know what he's going to do for the future. In this video, we're going to talk about it. We have JP Morgan strategists coming out and talking about what's going to happen in China in the future. What do you think Xi Jinping is doing for China? Let's listen to this video. Let's see if we can take this drawdown on what to expect in China. But before we do, like this video and subscribe to my channel. I'm always providing you guys with so much new content. So click that like button, click that subscribe button right now. First things first, look at this K-Web chart. It's honestly insane what has happened to the K-Web ETF. $101, $102 at its peak, all the way down to 1841. 81% drawdown. Guys, I'm not joking. Look at these companies: Alibaba, Tencent, Meituan, JD.com, Pinduoduo, JD, Trip, NetEase, KE Holdings. All these internet ETF stocks are getting killed in the market. These drawdowns are gonna happen. We can go to the MSCI as well. It doesn't matter what it is. Down 35% year to date. Look at the companies: Tencent, Alibaba, Meituan, China Construction, JD, Pinduoduo, Ping, Bank of China, Industrial, Baidu. All these companies are the main companies in China. People forget that China is #2 biggest superpower right now. These companies are trading like they're nothing, like they're just bad companies in bad markets that are not going to do nothing, that China's not going to grow anymore because all of their policy, which is kind of understandable because they're still doing zero COVID policy. They still had tech regulation, but they're trading like it's just a nothing country. China's not going to become bigger 5-10 years from now. So everything in China is just going down to hell. It doesn't matter what the market is doing, but it's just what it is. It's just what we're going to have to deal with in China for the foreseeable future. Who knows how long this will last? JP Morgan says Chinese stock sell-off is business as usual. This is what I'm saying. Equities tend to rebound up 20% after 6 months. So this is what they're expecting. Let's watch this video and let's see what she has to say.
Which is a drawdown. And you say, and particularly with China, drawdowns are normal. We should not be afraid of the Pharaoh drawdown.
Well, this drawdown we're seeing in China is absolutely business as usual for investing in Chinese equities. Every year you should expect a 20% annual correction, and every 3 years or so you tend to have an over 30% correction. We had this in 2018, we had it in 2015 and 2011, and it's unrelated to the economic cycle. It's related to China's regulatory and reform campaigns, which tend to happen every once in a while.
So that is very key to know, that we always see these drawdowns happening in 2018, in 2011, 2008. Look at this chart right here. 2008, 73% drawdown, 39% drawdown in 2010, 2011, 43% drawdown in 2015, 2016, 32% drawdown in 2018, 2019, and 2020, 2021, 32%. So you can understand why she says business as usual, because this always happened. This is just part of the market, part of investing in China. You're going to get these drawdowns. And when you get these drawdowns, you can expect another 20-30% rebound if you invest at a good time. And I think this is a perfect time right now. If you're buying these companies with strong moats, what is there to fear unless there's a war? And if there's a war, it affects every company. It affects every US company. It doesn't matter. A lot of profits, a lot of money that's being made comes from China. Tesla, Apple, Starbucks, all of those companies get money from China.
It takes time to rebuild confidence, but 3 months out, Chinese equities tend to be up 10%, and 6 months out, they tend to be up 20% during these moments.
Wait, hold on a second, Gabriella. Are you saying that it's a good time to go buy Chinese equities?
We fundamentally disagree with the thesis that China is now uninvestable.
And remember when they said China is uninvestable, and after that comment, Chinese equity rebound like 20-30%. Even with that rebound, we see this new kind of emotion come into the market and fear in China that it's just all going to hell and that this is going to keep happening with the tech regulation. And many people think that Xi Jinping is actually doing a good thing with the tech regulation because he doesn't want these monopolies to get out of hand. Stopping monopolies has always been a thing. When people stop monopolies in US, all this anti-monopoly against Google, against Facebook, against Amazon, no one says anything. But as soon as it happens in China, everything is going bad. Everything is gonna be privatized. Why does that sentiment come when it's in China, but it doesn't come when it's in the US? How many times has China just randomly privatized a company out of the blue, out of nowhere, just because it wanted to do that? Like, if you can kind of show me good examples of that, then I would believe it, but no one really does that. Xi Jinping is a communist. That's just gonna happen out of the blue. He doesn't care about the people. He doesn't care about the economy, etc., etc. So let's see what happens first before we come to these big conclusions.
Let's talk about how to invest in China. Let's go there, especially at a time when you've got so many cross currents. You've got the regulatory uncertainty around the shifting priorities of the executive leadership in China. You also have the slowdown that you're experiencing, as well as the COVID policies, which are much stricter than in places like the United States. How do you parse through all of this noise and figure out how to allocate at a time of such incredible uncertainty?
The noise is so high right now. The volume is extremely high. I think the trick is not to see each thing China says or does as an independent development, right? It's all a piece of a bigger puzzle. And what is that puzzle? It's all about this new phase of Chinese development. It's moving from a middle income into a high income country over the next 5-10 years. And it really wants to shift from the quantity to the quality of growth. And everything it's been doing over the past few months is aligned with that long-term plan. And what's quality? It's growth focused on innovation. What's innovation? It's not internet and social media. It's deep technology and renewable energy.
So when you see that shift of the poor going into the middle class going into the upper class, think about what's happening in the spending habits that's going to come with that. You're going to see a lot more spending happening in China. So this is all a good thing coming to China as they're trying to build a quality society, not just money, 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 money. So let's see what happens in China in the next 5 to 10 years. There's a lot of noise going on. There's a lot of people hating on China. Let's just see what happens. Hold these stocks for the long term. Guys, if you're bearish on China, if you're bullish on China, leave your comments down below. Like and subscribe. Peace.